Hey traders, welcome to another episode of Charts and Coffee. Happy Friday, everybody. Great to see everyone. All right, let's take a look. We're going to do some Q&A here today as we kick off this Friday. Options expiration, lots of interesting things going on. Not the least of which, finally, is some movement in bonds and gold. So I'm going to kick off this particular session with a quick reminder that if you haven't already checked it out, yesterday in the free video, so if you're on the Simpler Trading YouTube channel, you can already go check this out. But yesterday in the free video, what I did is I outlined the pattern and the timing of why gold was waiting on bonds. And that just doesn't apply just to gold. That applies to gold and it applies to silver. So GLD, SLV, why do you have to be aware of what's going on in the bond market and how do real yields influence gold? And I walked through that whole process yesterday and why I think this movement, this bottoming reversal pattern is one that you really need to train your eyes to. In 2021, this wasn't something we had to concern ourselves with in 2020. It just wasn't a conversation when we have a mostly parabolic straight up trend with very shallow corrections. You don't end up thinking about patterns like the ones that occurred in bonds, that occurred in silver and occurred in gold, etc. So definitely check that out. And if you're not familiar with the pattern, the continuation version in the current episode of the Countdown Trader free newsletter at countdowntrader.com is available. And then this week, we're working on the reversal pattern, which is a slightly different animal. A lot of folks, once they realize a pattern is out there, they tend to see it a little too often. So there are some environments where it just works better. So we look at the pattern and then we find where the high probability environments are. Check it out. Again, good to see this move. And I think, we might see a little bit of back and forth for some time, but it's good to finally see that move. All right. And I've got my bull shirt on today, feeling very, very bullish. Not today and not the markets are going to go straight up, but just in general. Are we going to get pullbacks? Again, if we keep that bull shirt attitude, we will look at movement lower as ringing the dinner bell, or as I like to call it, the blue light special. So definitely looking at a lot of between now and probably going into the early part of summer, being very, very optimistic about the current trends, breakout structure that we're seeing in the market. All right. Hey there, Jay. Oh, there we go. Since you started showing 1, 2, 3, a lot of setups have followed through with it. There's a reason that we're talking about it so much right now, James. And thanks. Yeah, we've been focused on this for a couple weeks now in the Sector Secrets Mastery. And if you're not aware of the mastery, it's at simplertrading.com/sector. So definitely something we've been talking a lot about. Qualcomm just did it. We've got that long in Qualcomm that we're looking to leg into, maybe a call vertical. Are there any other patterns just as powerful as this one? I gotta go into my bag of tricks that I've been filling for 34 years. This one is, funny enough, James, this is the very, very, very first pattern that I learned. This is the very first one that I learned. It's the one that I've got a lot of faith in because I've executed trades on it many, 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 many times. There's patterns all over the place, but this one is one. This is a Dow pattern. This is a Dow pattern. Is there anything quite as strong as this one in the application of continuation and reversal? No, nothing. This is kind of the best one for those situations. Maybe a deeper convo. I'm not holding anything back on you. What I do is I try to bring out the patterns. You'll see them in the free videos too, gang. Try to bring out the patterns that are most relevant to what we're dealing with right now. All right. So, if life hands you a bag of nails, you pick up a hammer and you get to work. That's the way that I look at it. So last year we had a bag of screws and then we just grab the screwdriver and get to work. So whatever it is that the markets or life has handed you, we just got to grab the appropriate tool. All right, great to see everybody. Michael says, yeah, public service announcement, Friday hates traders. Yeah, that's kind of my not so inside joke where I remind everybody the end of something is a far different psychology than the beginning of something. Hey there, stocks, options, and more. Can I talk about the 1-2-3 strategy? Stock options and more. Check out the videos that I just talked about. Yesterday's free video. And let me see if I can't find this video. Just bear with me here. You know what? Let's just do this right now. I'm going to go to YouTube. I'm going to go to the Simpler Trading YouTube channel, which if you guys have been checking it out on a regular basis, we post the free videos every evening. And then we have a lot of other videos that we post as well. Simpler Trading has been posting some training videos. And Jack had one right here. Allison did the one, I believe, the day before. Jack has a cool one right now. It goes into a trading plan. The video that I'm talking about is this one right here. The pattern and the reason gold is breaking out. And you'll see that right on the channel. But go ahead and check it out after Charts and Coffee or maybe during the midday session. And then check it out. Smash that like button. And I think you're going to find stocks, options, and more, that walks you through it. It's about a 4 or 5 minute video. Apps. Yeah, let's get into some discussion of apps. All right, let's see here. Oop. I'm trying to see which window. There you guys are. That is always the challenge of a multi-monitor screen, trying to find out where everything is. All right, apps. The apps has been moving, right? Very volatile. So let's talk about apps for a moment. And as we talk about apps, let's think about a few things about, and I'm just looking at another monitor here. Sorry, gang. Just looking at to do a thorough examination of a stock, you really need to know where it sits within the passive investing, the ETF universe. Apps. The one that's popping to mind is FFTY, the IBD 50. Okay, this is where that is for me in focus. I don't think we have a lot of other major ETFs that have apps as a heavily weighted stock. I think it's about 3.5% of FFTY, which is the IBD 50 ETF. So first of all, is this good structure? It actually isn't. This is actually not great structure. What do I mean by that? So if I'm going to compare, let's do this here. I'm going to give you guys a little deep dive here. Let's compare apps to FFTY. That's that Innovator ETF Trust IBD 50. So the very bottom, you're going to notice I've got these lines of triangles, little symbols down there. Neither is the FFTY nor apps in a consistent double green uptrend like it was back in here. And the thing that plagues most traders is not whether or not they can execute a strategy properly. If you're part of the Simpler Trading community, you've got that down. You've got the mechanics down, right? The thing that plagues most traders is that they don't match the indicators and the strategy to the underlying environment. And so in this case, trading apps, and I'll give you the exact dates. Oh, give me one moment here. All right, trading apps from December 7 to February 24 was a completely different environment. Can I get that granular? So can you. These are the studies that we share in the Simpler Trading community, and these are studies of the 813 and 81321 and 34 EMAs. That's what those little symbols, color-coded, are indicating if we're in, generally speaking, an uptrend, bullish environment, or chop. We're in chop now. This is a completely different animal. Am I going to prioritize choppy markets in what has to be a risk appetite environment? I'm not. The unpredictability of a market that's trading on the second row, yellow, is a whole different thing. And for those of you that have been waiting for me to have a good explainer for what we call the JT trend and the JT multi, which are two different as tools, really. One is studying 81321 and the other studying the 34 as a way to monitor sentiment and momentum and the trend. So just yesterday, me and my partner in the office, she works with me on all things Simpler that I work on. We just sat down And we did a really thorough breakdown of, okay, how do we help people navigate through understanding what it is you do with the JT trend, Rog? And that should be a future issue of the Countdown Trader, probably next week. But I would say apps, be very cautious here. Be very cautious, because the structure is already warning you that it's going to be a little unpredictable, that it's going to be volatile, that it's not the structure that we saw that was double green. That's my terminology, double green. Okay. We have a lot of made up words here sometimes, because sometimes the market just hasn't given us the vernacular for how to describe what the markets are doing. Double green is that EMA analysis. All right. So next up, Kathy says, I love Fridays. I love burning off the theta. Sure, I hear you. That's definitely a great way to look at it. 100%. All right. Good morning, everybody. Great to see you all. Saw a Michael Jordan video pop up there. PJ, I'll tell you what. My favorite thing to do when I'm just sort of plugging through charts and I just want to have some sort of white noise is I must have streamed through this. I just kind of keep it on in the background. Is The Last Dance. I just have that running in the background, and I just love, kind of the white noise and the awesomeness of that. So yeah, that's always good. All right. Good morning. Do I have a video explaining point of control? Roger, you don't need a video. You ready? Point of control, depending upon the look back. So look back is what? How much data am I factoring in for the analysis? Every study has a look back. In other words, a 50 period simple moving average has a look back of 50, right? So the look back, whatever your setting is, the point of control is the single price level that has the most volume traded at it. That's it. Pretty easy, right? And it's support and resistance. Sure, I look at volume levels as support and resistance, but also as sort of gravitational pull. So that's the best way to look at it. And thank you for the question. How about AMD? You got it. So let's do the same work here. Is this a trending market? No. And so when we look at AMD, well, what would we compare AMD to? What would we compare AMD to? Why can't I get the settings here? Just bear with me. So what we would do on AMD, holy cow, is compare it to semis. All right, I want to compare it to semis. There we go. Let's do it this way. All right. So what I want to do is, oh my gosh, it's feeling like a Friday already. My brain's already going on holiday. All right. So what we want to do, as you can see here, I'll change it to SMH. All right. You guys see that on the screen really well? Yes. SMH. So I can compare AMD to the semiconductors. All right. So now these two rows, AMD is the top pair, SMH is the bottom. SMH is bullish. What the heck's going on with AMD? It's a laggard. It is a laggard. And not only is it a laggard, it's a laggard that was double red from March 8 to April 5. So for nearly a month, AMD was in a downtrend, a double red. Okay, so what does that mean? 8, 13, 21, 34, showing us weakness. This is the 1, 2, 3. Check that video out that I was talking about. That 1, 2, 3 is happening. Let me show you what it looks like. Lower low, swing high, retracement that does not exceed the lower low, and then we're waiting for a breakout. And very conveniently, the automated Darvis, my automated Darvis right here, is showing you where the swing high and breakout is. I'm waiting for that level to get breached. That will complete this bottoming pattern. Now, if you want to front run this a little bit, we talk about this in Sector Secrets. There's a few things you can do to front run this, but if you want the confirmation, you're really looking for a break above the wave and a break above that swing high. Not that different than what I talked about in the free video about bonds, giving you the timing as this pattern was close to completion and triggered, giving you the timing as to when gold and silver would break and why that is so important. So yeah, I would look at that. I would definitely look at that. So thanks for the question on AMD. It's if there's sort of a psychology behind this, it's likely going to play catch up to the broader SMH narrative. No puppy today. Now husband's at home. No puppy running around the office, running amok. I mean, she already ran into the office this morning and ate the cat food that I keep here. So my cat lives with me here, and this practically lives with me here in my office. He's got his little basket by the window overlooking the pool. He's got his little disc that he's got it made in here. And I keep his water and food. And so the dog no sooner comes in and, it's cat food buffet time. So yeah, no pup today. Let's see. Well, thank you very much. I really appreciate that. That's super kind of you. And that's what we try to deliver here. Not to mention some caffeine. That's what we try to deliver here on Charts and Coffee. All right. Hey there, John. In Ultimate Day Trading. So that was a class that I did last year. That was my biggest class ever at Simpler. We've had some big classes, and that was my biggest class ever at Simpler. So a lot of demand for how to day trade, but focus on those first 2 hours of the day. And that was the Ultimate Day Trading class from 2020. Do we wait for the initial balance breach before determining that's a true trend day for a stock? So what I recommend, and this takes us beyond that 9:30 to 11:30 focus that I have. Those of you that have been in the live stream or the futures room, or even Wednesday when we day traded options in the sector secrets room, you know that I'm focusing on those first 2 hours of the day. And it's actually been a really good week. We haven't done a lot of trading, narrow clearing ranges, but it's been a good week. So do we wait for the initial balance? So if there is a higher probability, we never talk uncertainties, right? If there's a higher probability of the market grinding, it's going to be when the market breaks the clearing, breaches the initial balance, and stays above the VWAP. And the VWAP can be a really good level to focus on. But I'll tell you what, my friend, very rarely do I continue to day trade throughout the day. 9:30 to 11:30, I focus on day trading. I take a break in the midday during the doldrums, and then I focus on the last, say, 1.5 to 2 hours of the day, longer term time frames, ETFs, stocks, Forex, my portfolio, what have you, but I'm focusing on daily time frame setups, longer term swings, things like that. So, but the answer is yes. Remember though, you mentioned Wednesday. This is where the economic calendar is so important. I'm so glad you asked this. What was happening on Wednesday? And you guys know we've talked about this a number of times here in free videos and in the Charts and Coffee. Where do you start your day? Not with turn on the television. Turn on Forex Factory, turn on Estimize, or turn on Trading Economics. So tradingeconomics.com or forexfactory.com for the economic data calendar, the events that are going to affect the psychology of the day. High volume, high volatility. What do we call these? Those of you that have been following me for any length of time know you got to know your hot zones. Now, are there different kinds of hot zones? Absolutely. Wednesday was what? Look at Wednesday, the 14th. That's a caution day. Powell, Williams, Clarida, Bostic. Oh my, right? So this is a full-on, Macaulay Culkin Home Alone face for this day. And so are there hot zones that we need to be aware of for earnings? Right. It's just another kind of hot zone. It's another high impact volatility volume kind of event. That's where I'll go to Estimize. So in the morning, check those two calendars out. Know where the stocks that you're watching are 6 weeks from earnings, and then know the currencies that are watching, other central bank events, and the equity markets that are watching. Wednesday, I'm telling you this right now, chances are whatever burned you on Wednesday had nothing to do with the technical analysis of Tesla and everything to do with the just incessant shenanigans that we saw from Powell to Williams to Clarida to Bostic. Throw a little beige book in there. That is what makes a caution zone, or a caution day, right? So keep that in mind. Keep that in mind. So I don't think you did anything wrong per se. Just don't overlook those impactful events. Mike, is it a bad day for day trading being Friday and options expiration? I won't say bad. It's going to be more unpredictable. There's going to be more gravitational pull to those strikes that have higher open interest. We're going to see slightly less normal action. In other words, the market's going to be very geared to a very important, impactful overarching psychology. This is this expiration. Expiration can be better understood by looking at the liquidity, the open interest at different strikes to know, well, where is max pain? Where is the movement? How's that stock going to migrate? And then how's it going to affect the indices? I would say options expiration is a tail wags the dog environment where the individual stocks and their movement actually can have a disproportionate effect on the indices rather than the other way around. So it is a caution day, actually. I have a couple caution days. Well, actually, non-farm payroll, anytime Powell opens his mouth, options expiration, non-farm payroll. These are all going to be important to realize. The psychology is a little bit different, right? So thank you so much for the question. Pins? Sure. Let's take a look here. I'm over. Gosh. All right. We'll wrap up here in just a moment. Pins. Again, start with the structure, compare it to where it's heavily weighted. I would be very cautious. It's very close to earnings. Gang, there's different types of psychology as you get closer to earnings. There's different psychology in a trend going into earnings. There's different psychology in non-trending markets going into earnings. Pins, as far as I'm concerned, has been in a chop since March 3, and it has yet to emerge from it. But then those of you that are saying, Rag, I know this 1, 2, 3 you talk about. It's staring me right in the face. The move already happened. Boom, 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 breakout. All right in there, right through the Darvis. Yahtzee. So that move's happened. Where we are right now, that could be a projection from the last major move to where the target would be. But that was the setup. It was a continuation 1, 2, 3. Learn that 1, 2, 3 pattern, gang. It is going to be in play in a big way in 2021. 2020, I hardly even uttered the phrase. 2021, you see it again and again and again. And so this is a pattern you want to learn. Sear it into your memory. 140-year-old pattern. Big thanks to Dow. It's called the Dow 1, 2, 3. I'm sure other people call it different things, but the first explanation of this being a pattern was with Dow 140 years ago. Some of you will notice there are probably other things you'll see happening simultaneously. Most definitely things like harmonics, which brings in understanding this pattern on a Fibonacci type way, and you can add that knowledge to the pattern, increase the probability, but it's a great pattern to start training your eyes to. All right. So as always, gang, sorry about running over. It's Friday. I hope you guys have some fun planned for the weekend. Unplug, maybe read a good book. I'm going to reread, actually, this one right here, Simple Wealth, Inevitable Wealth. Really great book for those of you kind of thinking about some of your long-term positioning as I'm going into a fresh quarter. I'm actually thinking about longer-term positioning, my portfolio. I'm also going to be rereading this one, Breaking the Habit of Being Yourself. You notice I got the pen attached to it. That's how often I flip through this thing. And I just picked this one up. I have no idea, but it's got good reviews, and it's called The Alpha Master. So, yeah, I read a lot of books at once. I do enjoy it. And just for fun, right? Because I've been really bad about working out and stuff. Little Tim McGraw, Grit and Grace. He wrote a book about that. So, all right, well, who doesn't want a little Tim McGraw over the weekend? It's one of my favorite country guys. Anyways, you guys have a great weekend. Find something good to read. Any one of these three would be great. But definitely Breaking the Habit of Being Yourself and the Nick Murray Simple Wealth, Inevitable Wealth. That's a really good one, especially if you're trying to put your brain in the right space to manage your longer term portfolios and just your financial mindset. Yeah. All right, gang. That's all I got for you guys today. I'm going to wrap up. Ran a little over. I'll see you on Monday. Same time, same station. Be good to each other. Remember, it's Friday. Options expiration. And I will see you all soon. Okay? Take care. Be good to each other.